Hey everyone, welcome to my YouTube channel. Dave Ganderos here. I try to put out videos daily on ways I'm generating streams of income, crypto, forex, other opportunities, and I share information with you for you guys to see if it's something of interest to you, and then you can consider getting started. I share educational purposes videos such as technical analysis and ways that you can figure out what's going on in different markets and decide to trade if that's something you're interested in. So consider subscribing to my channel, liking, and sharing this video. Once we get up to 2,000 subscribers, I'm going to do a crypto giveaway. In the video description, check for the timestamps. Sometimes the videos get a little longer and you can hop around to different topics if you can't watch the whole video. Also, income disclaimer, I am not a financial advisor. Again, this is what I'm doing. This is what I see. Take the information and do your own research to be thorough and complete so you can make an educated decision on if it's good for you or not. Look in there in the video description for other lists of ideas for videos. So if you have something else you want me to talk about, different topic, different altogether different, just put it in the comments. Maybe I know something about it and I could share whatever I know. I might know a little bit more than you, I might know less than you. So as a community on our channel here, we can learn together. And then there's in the video description, there's also lists of other opportunities that's generating streams of income for me. So take a look, and if it's interesting to you, you can get started with those opportunities. And then finally, in the video, there'll be other videos related to the topic I'm talking about. So if you want to learn more about the topic, such as maybe technical analysis, I'll have a bunch of videos listed in the video description that you can click on and watch. So with that being said, we're going to do a new coin today in real time with you. I haven't really looked at this other than finding it on TradingView and putting a chart together for it. It's going to be a real-time discussion with you. We develop what we see, and we'll start tracking it like we do the other ones I have on TradingView. So with that being said, let's get right into it. We're going to talk about Sandbox. Now, Sandbox is something I've been watching and interested in for a while here. This virtual world, augmented reality, selling of virtual land. I think that's going to be a big hit, and it's probably already a big hit. I haven't really been following it in that much detail, but I do know there's a bunch of people trying to buy land in those spaces. I think that's going to be a new platform for advertisement and revenue growth for different companies, and I really think it's a good coin. As you can see, it's gone up a lot. So this is compared to the U.S. dollar. Since February, it was just at 7 cents. Now it's at 70 cents. So it's up 10x already. And if you know anything, it's pretty obvious. You could tell here that this is a nice Elliot Wave. We might be in an ABC correction right now based on Elliot Wave. So this is on the daily chart. Let's put in some high-level Elliot Wave. So that's wave 1. And then you can consider that wick or maybe not because everything was crazy. I think that was the day everything went crazy. So let's just skip that. Let's consider that the bottom. And this is wave 3 to wave 4. And then we're anticipating this possibly being 5. Now, if that is 5, let's just check a couple things. Wave 2 to 3 has to be equal to or greater than wave 1. So you could see that wave 2 to 3 is greater than 0 to 1, so that's good. The next requirement for Elliott Wave is that wave 4 can't go below wave 1, and that's also okay. Now, typically, as I've mentioned, if one is shallow, the other one's deeper. So let's measure the fib retracement of the first one. It's come down to just about 618. So it missed it a little bit. This wick hit it, but realistically, it missed it just a little bit down here. So that was somewhat deep. And now let's check to see what this looks like. Alright, so this is a little bit more shallow. It hit the 0.5. So deep and a little bit more shallow. So that's typical of Elliott Wave. Now the other thing we can see is if we do a fib extension from the base of 0 all the way up to 3 and down, you know, 5 usually goes a little bit higher. So this might be just a stepping stone to getting up into the 5. So five's usually at least 1-to-1. But a lot of times it goes somewhere in between here. So let's just put this target over here as where wave 5 can be of this Elliot wave. So this might just be a 1-2, 1-2, you know, like kind of a zigzag up to 5. For sure it needs to come here. It should really be a 1-to-1. So this might just be an you know, from 4 to 5 wave. That's where we might be right now. I really don't see it correcting it. I think it's going to push to 5, and then at 5 we'll see a we'll see something like this. Before it starts the new track up. So if you're not in a trade already, you know, this would have been the area to get into a trade. You can kind of see this is, you know, this is broad picture here. This is on the daily, but you can see there was a you know, there was sort of a wedging pattern that followed here. So if you take, again, AB is equal to CD, that would be 1-to-1, and that would be putting it exactly here. So it's in the middle of a trade. What you can do here now, since it is retracing on this latest push, let's get rid of this. You can consider waiting for a nice retrace here and then getting in. A nice retrace would be somewhere between the 0.5 and 618. So right now we didn't touch the 0.5 yet. So if it comes down a little bit further and you believe that it's in the bull market and we're still going to go higher, you know, this would be the range that you could be entering into a new trade. So you certainly should wait until it gets in this range, and then you just dollar cost average into a position for the push higher. Again, the push higher, you know, for sure, based on this retracement right here, you got the algo target that's sitting up here, right? That's one. The next one, you know, you want to really consider is the previous peak. You know, the break past that, you're going to see some resistance. So these are two upside targets. And then you got the 5, which is up here. So these are 3 areas. If you're getting over here, these are 3 areas that you should consider getting out. Again, as I've mentioned in my other videos, you would be getting in here, you know, as price action moves higher. Right? Every time you see these pivots, you should be moving your stop loss higher. So, you know, once it breaks through here, it's going to probably come back and check. You want to do your stop loss. Once it moves far enough away from your entry and you see some pivots, you want to move your stop loss to break even. So at that point, you're not going to lose any money. You may not make money, but you're not going to lose money, and not losing money is making money. So that's how you should consider the stop loss and risk management aspect of it. We could drop down a little lower here, time frame. All right, so we see that I'm still drawing with the brush as always. Oh Jesus. I mean, there is a downward facing, trend line here that you could wait for the breakout. And again, over here, same kind of thing. You got this, got kind of a wedge formation here. You could call it a bull flag as well. There was volume in this push higher, so you could even call this a bull flag. I would think that you might see some action for the push higher when it reaches these lower fib retracement levels, 0.5 to 0.618. So you could draw out these this wedge so you hit that range, and then if it stays within this downward trending target, then you would wait for it to fall into this range, this range that we talk about right here, right? Wait for it to fall in there and wait for the break above this trend line. Once it breaks up, it's gonna do its standard break up, check, and then go, right? So this is where you should be. If you're waiting for the breakout to enter a trade, that's where you should wait until. If you're going to start averaging into a position when it hits between 0.5 and 0.618 or 0.65, you could do that as well. If you're playing the retracement of this path, of this run, you could do that as well. If you want to do, if you want to figure out where this can go based on this falling wedge or bull flag, if you want to call it a pennant or a bull flag, you can. Just trying to clean this up. You could do a trend line from the base of the flagpole to here, and then do a breakout, somewhere over here in that DCA area. So say you see something like that. Then you can kind of see where it's gonna. Oh, look at that! It's kind of matching up to this target right here. So you got some confluence here on this breakout. If the breakout happens when it approaches the 618.5 retrace of this latest pivot, the pattern target falls kind of right in place with this area that I had drawn here. So again, this is what I would do. I would wait for the breakout or dollar cost average into a position once it hits this range. Wait for it to check. Once it goes higher and you get away from your money, start moving your stop losses as I show you here. Move it to break even. And when it breaks through here and comes back and checks this high right here, move your stop loss here. And then this is drawn nice, so I'm just going to copy this. Same thing here. So maybe get out of 25%, get out of 25%, get out of 25%, and let the rest run, and just continue moving your stop loss higher and higher along the way. So let's leave this on the charts. Let's see how this plays out. Again, this is very nice pattern here, very clean at the 4 hour and the daily. You could see clearly the Elliot Wave patterns here, and now we're waiting for this wave 5 to be completed. And then you should really consider getting out of here, because typically there's an ABC correction. It could be a double top. It doesn't necessarily have to go higher than 5, and it typically comes down lower. So this would be the next, after this trade ends, somewhere in this area is where you would be looking to get into the next trade. So don't chase it. Don't fall in love with this crypto. Get in and get out. Make your profits. Take a step back and wait for the next trade. So I really like this one. This one is really shaping up to be a nice time frame down here to buy in. And especially if you're dollar cost averaging and you're holding this long term, you should be considered dollar cost averaging along the way. Buy some here. Maybe get rid of some on the way up if you're not 100% a hodler on this coin. Get out of here, and then when it comes back down here, maybe consider dollar cost averaging again in. And we'll talk about where to do that once we see more price action. But right now, the trade is approaching where two things are going to happen here, right? It's either going to fall into this area that makes sense to dollar cost average, or there's going to be a breakout of this trend line. Now, it doesn't mean that this has to come all the way down here into this dollar cost averaging. This just means that this is the ideal area if that's what you want to do. it could break out at any time. So what you really should be doing is putting an alert on this trend line and waiting for the breakout and the check. And then this check, if it's not in the, if you're not dollar cost averaging in down here, if you're waiting for this breakout and check, you gotta wait for it to confirm that it's going to stay above this trend line and start pushing higher. Again, just as you saw with this on the daily chart, you could see it a little clearer. Well, actually, not too much clearer. Certainly right here, you see this volume above, it's peaking above this average down here. These three big ones right here. You know, those are the kind of volume sticks that you want to see for this confirmation. So, you know, you want to see it above this typical low down here. You know, these three right here, you know, even this one is okay. It's pretty high. It would be almost double the average of where we are right here. This is very low. So somewhere in this range or even this range would be okay for a confirmation. You know, I mean, if you get something like this, then you know for sure it's a true breakout. You know, these are pretty high. But anything above the, like this, you can consider this like the noise floor in the spectrum of everything, right? And anything that's peaking higher is out of the ordinary. So this is what you're looking for, stuff that's out of the ordinary. You know, this is ordinary down here, right? If you look in the big scheme of things, most of the average volume is down in this low area. Only these big right here, this group right here, this one right here, this one. These three or so right here, and then these 3 or 4 right here. Those are the spikes you're looking for the breakout. All right. So that's really it. I'm gonna cut this video off on this one coin. This was a coin that was suggested in the comments by one of the subscribers. So I decided to take a look at this. This is something I've been hearing and following and watching, but I really haven't been doing any trading, and I don't even believe I hold this coin. So I might be considering getting into some of this. I think some of the systems or exchanges that I use have it, so I'm going to actually look to buy some if it comes down here. I mean, you know, we all wish we would have got in at 7 cents, right? I mean, back here, you know, it's 10x already. It's doing well. I mean, if you got in there, that's almost like the Cardano move, you know, down under 10 cents, and now it's at 70 cents. So this has been a nice move. I think it's still going to go higher, you know, based on level 5. You know, this is just about this Elliot Wave right here that we have is just on a bigger scheme of things. This is just number 1, right? This on a big scale. This is just number 1, right? I screwed that up. I was just trying to show you. That's number 1 of a bigger picture Elliot Wave. So after this hits here, this is the end of 1, and we're going to look for the 2. So, you know, you see how the 2 comes back down. That's why I'm saying this ABC could be the formation of the next run higher of the 1-2. All right. So yeah, that's it. Again, thank you for the comment. Thank you for kind of forcing me to look at this one in a little deeper, and I'm going to be considering buying in if it comes down here in this range. Let's see what the range was. Somewhere between, I would say, like 70 cents. 70 cents and 6.5 cents. Oh, I'm sorry, 70 cents and 65 cents. Right now we have a peak of 90 cents. So from here up to 90 would be like a 30% move, right? If you take the measured from, if you get in, if you got lucky and somehow you got in down here, and you play it just to the first, reaching the high that we had on the 29th of March, you're looking at 36%. And if you get in down here, so let's just go conservative. Let's say 70 cents. And you pull it all the way up to this 5, the end of 5, you're looking at a 78% trade. So who's not gonna want to do that, right? And then again, if you after you get out of that trade, just wait for it to come back down. It's gonna come down and test this peak, you know, and again over here, you're not gonna see this go straight up from here. it's going to come down, it's going to check again, and it's going to go up, and then it's going to check again, and it's going to go up. It might break through, it might not. It might just come straight right back down. Or it might push through and even do an extension even higher. You know, this up here is a 161814. This is a 1-to-1. This is like a very conservative target for this Elliot Wave pattern to play out. So it could go higher. And you figure out the higher. I don't know if I had it on here, maybe not. Alright, so this is a conservative number. Let's just throw the extension of the 618. You go from here to 3 down to 4. You know, the more typical number would be all the way up in here. Oop. Somewhere in the middle there. You can, I mean, if you want to go 618, that's basically $1.70. So we're at 70, so it can go up $1 if it hits the extensions that it typically hits. You know, somewhere in between these two Fibonacci extension ranges. This is the typical target of the 5. Now I'm drawing it, like I said, I'm drawing it on a conservative basis. Right? I have it drawn here as a 1-to-1, but typically 5 can go all the way up to here. So I'm going to leave it here at 1-to-1 to be a little bit more conservative. But these are the areas that you consider getting in. Get out a little bit here, get out a little bit here, get out a little bit here, and then leave the rest to run to this higher number. And then once we see the peak and it starts pulling back, we know that we're in an ABC retrace correction, and we can set our goals on when to get in again. So right now, wait for the breakout, do your risk management, move your stop losses, get out of partials all the way up, 25%, 25%, you know, and then just leave the rest to run. Just move your stop loss up. Once you move your stop loss above break even, you have a winning trade. So there's no risk. It's a no risk trade, and that's the ideal situation that you want to find yourself in when you're trading. Again, don't let greed get you. Just be consistent and keep your mindset straight, and everything will be cool. So that's all I gotta say about Sandbox. Thank you for watching. The video will get a little longer here, but this is the first time looking at this one, so I wanted to do this from scratch with you guys. But you can see these patterns playing out over and over. You know, wedge break, and when these breaks happen, you know, a typical target of this wedge is the previous high. So that's the most conservative trade. If you want to get in on the break and get out on the peak, that's where you're going to do your best, and you're going to take the money and run with it, and then wait for this retrace or the next retrace to do the same thing. When a new wedge is forming, wait for the breakout, take profit. Wait for the breakout, take profit. Wait for the breakout, take profit. And getting in and getting out, you know, if that's what you want to do, depending on how you trade, that's a good philosophy, because you don't have your money just sitting there waiting for all these moves, you know. But if you're a longer term trader, there's nothing wrong with waiting for these longer targets to hit. Now, just be careful with leverage. Leverage will eat up, you know, there'll be costs associated with using leverage. So the quicker you can get in and get out of trades, the less money you're giving away for leverage cost. And ideally, if you could do this without doing leverage, then you don't have nothing to worry about other than the transaction fee of buying and selling. You don't have to worry about the leverage cost. And this coin is low enough where you might be able to do that. You know, under $1, so it's not like it's a $1,000 coin. But it's all relative. The price of the coin is relative. You're looking for that percent on the trade. And what I was showing you here, from 70 cents up to 90 cents, you know, even if you just do that trade, you know, that's a good 25% trade. You know, if you go to $1, 75 cents to $1, that's 30%, right? 33%. So numbers, the dollars don't matter. You know, if you buy fractionals because the price is higher, it's a matter of the percent on the trade, the risk to reward. How much are you risking to how much you're making? So don't get hung up on how many quantities you could buy. Just look at the percent of the trade that's forming, and it doesn't matter if you buy a fraction of one. You just buy one. You don't have to buy hundreds and thousands of these. To make it's all scalable. If you buy one and it hits a target, it's still 33%. If you buy 1,000 and it hits a target, it's still 33%. It's just how much money you have in play on that trade. And you got to trade with what you can afford. So don't over leverage, because when you put the higher leverage, you risk losing it all, because, as you know, crypto prices swing pretty hard and deep. So you got to be conservative with your leverage. Otherwise, you'll blow your account. All right, guys, take care. Until next video. Don't forget to subscribe. Click the little bell. When we get to 2,000, we're going to do that crypto giveaway. And that's it. So I look forward to having you on my channel as a subscriber, and look for the next video.